Hello everyone, I'm Charles Brown, Portfolio Manager with CB3 Financial in Chicago. This is your Daily 5 brought to you by Stock Charts, and today we're going to be talking about using NDX as a benchmark. Now I realize that sounds kind of unusual, but I'll tell you why in just a little bit. We are money managers. We're a registered investment advisor here in Chicago. Our website is cb3financial.com. We, as I say, are fee-based. We don't do any commission products at all. We use stock charts on a daily basis to generate ideas that produce income and results for our clients. Risk-adjusted results are what we're seeking, and stock charts is an integral tool for doing that. Here's our website, CB3 Financial. You can actually check us out there. You can do a free risk assessment there. That button on the left and the button on the right allows you to create a financial plan, and we can look at it for you, or you can just do it on your own, however you want to do it. We're very transparent in what we do at CB3 Financial. This is our growth program year to date as of last Friday. It's actually up higher today. We had a really good day Monday today in the market. But everything's here straight off the Interactive Brokers account except for the actual account number. And we'd be glad to talk to you about how we achieve these results if you'd like to do that. But for now, let's look at our 5 daily charts. Okay, so the first thing I want to do is talk about NDX. So that's the Nasdaq 100. Most people think of using the S&P 500 as a benchmark, and we did when the year started. But as the Nasdaq completely took over the performance after the March 23rd low, it became evident to us that if we really wanted to beat the market, we couldn't set an easy pitch like the Dow or the Russell, which was still losing year to date. We needed to use the Nasdaq. So to generate the best risk-adjusted ideas for our clients, that's what we're doing. Now you can see on the next image here, this is really still chart 1, I highlighted the RRG and how this is flattening out. So in August, the Nasdaq performance has slowed down, and some of our clients said, well, aren't you concerned we're losing momentum? Well, actually, I still believe in our trade selection, and based on the analysis that we're doing, I think we're in great shape. What's happening is the Dow and the S&P and the Russell are catching up. So the asset classes are trying to follow the lead that the Nasdaq has made. And by reviewing these charts on a daily basis, I can see that. And so I'm very comfortable in the positions that we have. Let's look at the next chart here, which is VBINX is the benchmark, which is the international stock 60% weight with international bonds at 40% weight. Pretty standard benchmark to be able to check on whatever you want to look at. In this case, it's the 4 major asset classes. So if you're familiar at all with RRGs, you know that we're looking at the leading quadrant on the left and the improving quadrant, leading quadrant on the right and the improving quadrant on the left. Okay, we don't have lagging and weakening on here because none of the assets we're looking at are in those quadrants. I just wanted to zoom in. We're still seeing strength over here on the right-hand side with QQQ, although momentum has weakened. What concerns me the most is that, the huge circle that IWM, which is the Russell 2000, brought to the RRG and is now weakening. SPY is weakening. DIA is weakening and just not coming in with the same amount of momentum. And we would expect this for August, but it tells us that this is not the time to make an allocation change. We're pretty convinced where we are right now that we're where we should be. Now, if you look at this on a daily chart, so this is the 3rd chart, it's a little different story. So IWM is just blasting into the leading quadrant, going off the edge of the chart, literally. Almost need to change the focus of the chart there. But the Dow, the S&P, and actually the Nasdaq is losing a little bit of momentum. And this goes back to my theme earlier. It's okay. It's okay because the Nasdaq has been the leader so far this year. We want to see the other major asset classes catch up. We want to see the Dow, the stalwarts, catch up to where the Nasdaq is. So the next thing I do here on chart 4 is I want to look at what's the strongest sector and how are the constituents behaving in the strongest sector this year, which is clearly technology. So this is XLK. And I look at the chart and see, okay, Apple's where I expect, AMD's where I expect. Where am I looking to put any new money right now? Well, CTSH maybe. But the truth is there's a lot of weakening stocks and a lot of lagging stocks in XLK, and not even much that's coming in from the improving quadrant, at least as far as getting ready to break into the leading quadrant. So based on what I'm seeing on a weekly chart, and we'll go to the fifth chart and see what we have here on a daily basis. But the reality is there's not a whole lot interesting me right now, which allows me, again, to use the bar charts, the candle charts, and then the RRGs to see if I can get a consensus that all rings true together. And right now, what I'm seeing is we have leadership with XLK. I'm content with that. Do I want to add to that right now here in August? I do not. We have the political conventions happening, so that's some fundamental data that I'm using to make decisions. But the reality is these are charts that I look at every single day, and that's what I'm going to do as I present these episodes to you, is show you how I use a combination of the traditional candle charts with the RRGs, and even bringing in the new charting system that Stock Charts has entered or has created here. It's just barely breaking out, I guess, the last month or so. So we're still incorporating that into our analysis process. But that's how we go about making decisions. So this is the risk profile that you're welcome to fill out on our website if you'd like to get an analysis. It's about 5 minutes to fill in the data, pretty straightforward. Welcome to do that, and then you'll get an email of the results, and if you want to have me look at it, that's fine. If not, that's fine too. And we also have an option to have you fill out the basics of a financial plan, just to see if you're where you need to be for savings, debt reduction, balanced assets with your 401k, just let you plug in a lot of data and make some decision there. So that's how we help you. So if you miss any of our episodes on YouTube, you can go back on our website and catch them. But we do have a weekly Thursday night program and a weekly Monday afternoon program. So this will be adding to that basis. Again, we are registered investment advisors. You can check us out here. You can subscribe to us on YouTube, Facebook, Twitter, of course, and I do tweet every single day, sometimes twice a day. I'm guessing now with the political conventions coming up that there's going to be a lot moving the market. And of course, the latest topic here are the postal employees and how that's going to affect the election. So there's always something to talk about. There's always new charts that I'm looking at to make the decisions for our clients. And I hope you'll join with us on that, okay? So there we go. There's my first episode of Your Daily 5. Really enjoyed it. Hope you guys got something out of it. And just come back, see us again. You know where the button is for the subscribe. You know what needs to be done. If you like it, just hit that like button. Again, I'm Charles Brown with CB3 Financial, where we don't just manage your assets, we become one of them.